Welcome to Unsuitable on Rea Radio, the award-winning financial services and business advisory podcast that challenges your old-school business practices and the traditional business suit culture. Our guests are industry professionals and experts who will challenge you to think beyond the suit and tie while offering you meaningful modern solutions to help you enhance your company's growth. I'm your host, Dave Kane. There's certainly a lot of rhetoric being thrown around these days, especially with regard to current legislative issues. Today's guest will help us cut through the jargon to tell us what business owners can expect to face from the state as well as the federal government in the coming months. Greg Saul, Director of Tax Policy with the Ohio Society of CPAs, is here to discuss these legislative concerns the business community will be grappling with over the next few months and what the Ohio Society is doing to be an advocate for Ohio's business community. This is surely to be a great episode, and I can't wait to get this thing going. A lot of information. So without further ado, welcome to Unsuitable, Greg.
Yeah, thanks for having me. If I would have known that was your intro, I probably wouldn't have wore a suit, though, because it didn't really go that well with
Well,
that.
you can, if you want to take the tie off, go ahead. You know, we had a guy take his shirt off earlier. That didn't, you know, we had to cut that out of the episode.
Okay.
But you know, Greg, I wanted to talk a little bit, and you and I talked off air yesterday about the power of the Ohio Society. And, of course, as a disclaimer, and I don't mean this in any negative way, I'm a member, dues-paying member of the Ohio Society, been for a long time, very proud of that organization. But the Ohio Society of CPAs can be a tremendous resource for businesses within the state of Ohio. A lot of times we have clients, and us even as individuals, complain about a tax policy here or a policy there. We're not sure what to do about it. We can write our congressman, senator, but we also forget about we can contact the Ohio Society, we can contact our CPAs, we can contact you, and you guys will go to work for the business owner, because I've heard you say on many speaking engagements that the Ohio Society is here to benefit the businesses within the state of Ohio.
Yeah. I mean, we have several committees that members can volunteer on, especially legislation-wise. We have a state and local tax committee. But more importantly, like on everyday issues that come up too. You know, I always get calls. Depending on the volume of calls that I get in from the office, kind of lets me know what's going on out there. I see our members as kind of at the grassroots level, and you know, you guys are our eyes and ears. And if something needs to be done at the legislative level or with the Department of Taxation, you know, if they're auditing on a particular issue, I know that that's come up in the small business deduction and the business income deduction realm, and we've been able to act pretty quickly on that as well. So, but I always encourage members to call in, or you know, if you see me at an event, also you know, come up to me afterwards and tell me what's going on out there, so we can act on it quickly.
You know, I forget the Ohio Society of CPAs is actually a leader of all the associations across the United States with the American Institute of CPAs, and even Washington, D.C. knows the Ohio Society.
Yeah, I mean, as a state, we're pretty lucky because we have Congressman T. Berry and Congressman Renacci are currently on the Ways and Means Committee. Senator Portman and Senator Brown are both on the Finance Committee in the Senate. And so those are the two committees that hear a majority of the tax legislation in the House and the Senate. And so it's good having them as a resource. You know, here at the state level, we do stay more so involved because we're a state society. But you know, we have myself and Barb on staff as lobbyists, and we also have contract lobbyists. Some state societies are not as involved with staffers actually being lobbyists. So some states just have contract lobbyists, some of the state societies. So especially like here in Ohio, it's good because you know, we actually work for the association, for the society, and so you know, our interests are only for the society. You know, sometimes when you hear that, you know, the negatives of lobbying, contract
Right.
lobbyists have several clients sometimes, but you know, Barb and I are just solely lobbying for CPA interests, accounting interests in Ohio.
Fantastic. On earlier episodes of Unsuitable, we've had information regarding changes, upcoming changes under the Trump administration to the federal tax code. Today, I think we're going to focus more on the state of Ohio code. We may touch briefly on federal, but I think the state, there's a lot going on in the state that I think we need to share with our listeners who are primarily business owners within the state of Ohio, or the surrounding states that do business in Ohio. But one of the facts, and I don't know if this is completely true, but or the number is accurate, but tax collections in Ohio or the revenue budget is behind by about $850 million behind the estimate. Does that sound about correct, with most of that being from the tax side?
Yeah, so most of it is from the income tax revenues not coming in according to projections. That's the take from the taxes. The state has said that they're probably going to end this fiscal year in the black, and Ohio's fiscal years are July 1 to June 30th. So we're about a few weeks away from the end of fiscal year 2017. Fiscal year 2018 will start July 1, and that's why we're actually working on the 2-year budget right now. They have to have that in place and signed by the governor by the end of June 30th. And so the reason why the state still thinks that they're going to end in the black, even though the tax revenues are down, is because they had projected more having to spend more on Medicaid and some other areas. They didn't have to spend that much, and so especially in the Medicaid area. So they think they're going to end it in the black, but this is kind of the trend on where they're looking at what it's going to be like for the next 2 years, and so what they're taking a look at is they think they're going to have to cut about $800 million in spending. That's what they came out with a couple months ago.
800 million.
I think that's still around $800 million to about $1 billion, and so where is that going to come from? That's kind of what's being discussed right now.
Great, and we'll jump into that. Another area that you shared with our firm is over 50% of Ohio's budget funds are spent on health care. Does that still hold true?
Yeah, in the context of the 2-year budget, because Ohio does a separate transportation budget and a separate workers' comp budget. So when you throw that in there, it probably wouldn't be half. But in the context of the budget that they're doing right now, it is Medicaid is they always say the 3 things: medicate, educate, and incarcerate. So those are the 3 areas where Ohio, for good or bad, has to spend most of the money that is in this budget.
And revenues are down.
Yeah, and so and also everything that's going on at the state level has to kind of operate in the context of what the feds are doing. And so with the Medicaid expansion that Ohio did a couple years ago, they were being reimbursed by the federal government 100%. And then for 2017, we're on the hook for 5% of that. And then starting in 2020, it'll be 10%. And so Ohio's going to have to come up with more general revenue fund for that. If that's kept, if the federal government, ends, depending on what they do with the repeal and replace, we could be on the hook for it was about 700,000 extra Ohioans that came on the Medicaid rolls because of the expansion. And so if they, end that program, the expansion reimbursing at the federal level, Ohio may be on the hook for all 700,000 of those that, we expanded it to.
So the state biennial budget, and you referred to that, has to be completed by the end of June, which by the time this podcast airs, it'll probably be in place. Will have to be in place by statute. But that's the current main legislative priority and impacts all industries in Ohio. Mm-hmm. And you expect that to, obviously we're in the first part of June, you expect that to pass shortly?
Yeah, I mean, right now, as I'm talking here today, it's in the Senate, and the sub-bill is coming out next week, and so there'll be several changes to it. And then after that, it gets voted off the Senate floor, and then the last week of June will be a conference committee where the House and the Senate work out the differences between the bill. And then once the conference committee report comes out, there cannot be any more changes to it at that point. It goes to the House floor or the Senate floor, just an up or down vote. And like we said, it has to be voted out, so it's going to pass. And then the governor in budgets has line item veto authority because they have appropriations. Normally, he just vetoes a bill or doesn't veto a bill, but in the budget bill, he can literally go through line by line and just veto language that he doesn't want in the bill. And then he'll sign it, and then it'll be in effect, like I said, by midnight on June 30th. July 1st, is the beginning of the new fiscal year. So, and there's actually an old Senate finance director that has a party on June 30th, Rockin' Fiscal Eve. The location of it changes, but it's kind of a big deal.
Did you go to that?
I have gone to it, so maybe I can invite you guys this year too.
It'd be great.
So,
We're there.
It's usually a pretty good time. It was at. The location changes, but the last couple of years it's been at Miller's Ale House down in like the Grandview area.
Sure. But as we started out, the revenues are down. let's say 850 million, and you referred to there may be some tax cuts between 800 million and $1 billion in this budget anticipated to balance the.
I think more so they're trying to cut spending. So they're not having tax increases.
Okay.
There was some proposals in the first part of the budget. The governor had, and over the years, has been trying to cut the income tax, but was expanding this sales tax base and rate. There was going to be a small increase in the sales tax, and we had fought this the last couple budgets. The sales tax to professional services. 4 years ago, it was specifically on professional services, and then it was management consulting services with a definition that included a lot of what CPAs and attorneys and a lot of professionals do. And so this time it was a little more limited, but most of that stuff is out of the budget at this point. There is, we can get into this maybe a little bit later, but the municipal tax proposals in there, kind of continuation of what we had done a few years ago with House Bill 5. But I think the majority where they're going to get the money is mostly from cutting spending instead of trying to institute any kind of tax increase. But also that means that there's probably not going to be much room for tax decreases this time.
Right.
So.
Okay. Are there, in your opinion, any with the spending cuts? Are there any industries that you feel that might be hit harder than else? Like you mentioned, education. Could that be something to look at?
I think that they were trying to at least keep education flat funded, maybe slight increases in some areas. I think healthcare is kind of always an industry that they're looking at, especially because it's tied to so much of the Medicaid budget, and we had said that's about half of the budget spending. So that could be somewhere where they take a look too. State agency cuts, the agencies actually request money to operate. A lot of, they're trying to pare back on, the spending. A lot of what the state I think has been doing too is attrition rates. Like when people are retiring now, there's not as many jobs that they're hiring those positions for, so that they do see some savings from that as well.
Great. You'd mentioned earlier about the municipal tax, and that's one area where we get a lot of feedback from our clients, especially when we send them an invoice for their year-end tax services, and we're filing in 50 municipalities and pay $10 of tax, or an example like that. The Ohio Society went to bat and was instrumental in getting some uniformity, not complete, but some uniformity in municipal tax.
Yeah, in House Bill 5, the 20-day rule applied to withholding only, not net profits. Now, this time around in the budget, the focus is more on the business net profit side with the centralized collection administration proposal that's in there. So, with the 20-day rule, and I still do get calls about, because at the end of the day, the state language, the code is standardized, but the cities are still implementing it. And so I do think there is still some confusion out there on how it's being implemented by some of the cities. But the old one was 12 days, and then we went to 20 days. The Federal Mobile Workforce Act is out there. They have a 30-day standard. That would have been a big jump from 12 to 30. So the reason why the state compromised on 20 was because there's 4 weeks in a month and 5 work days typically in a week. So 4 times 5 is 20. So that's where the 20-day rule came from. It's not retroactive back to day one anymore, and so that helps with employee withholding, because the withholding tracks the employee. The net profit side, follows the business. So, that 20-day rule really didn't cut down on the amount of net profit filings businesses had to do. And so, what the stat is out there is about 15%, depending on the city, but about 15% of their income tax revenue comes in from net profits. And so that's really the side that we're taking a look at with this centralized collection proposal.
And refer that 20-day rule, just for listeners, that means if I'm in a municipality or working in there 20 days or less, I get a little bit of a tax break compared to what it was in the past.
Yeah, so you would start paying into the non-resident city where the business will hit on day 21, but you're still paying tax.
It's a little easier compliance.
It's more for the compliance, because if you so 20 days a month, so theoretically the most that you should have to file on behalf of an employee would be 12, because there's 12 months in a year, so it should cut down on the amount of filing.
In your opinion, is there more municipal tax reform to be done?
I think that, when you look at it, there's a lot of things out there, whether it's going to get accomplished through the legislature or maybe someday in a ballot initiative, but, you always hear about the credit reciprocity. A lot of the cities are kind of, if they were at 100% granting a credit, now they're kind of moving off of that so that you have to pay, where you live and, depending on the rates. I mean, it really does depend on that, but that's something that could be down on the road, but I don't necessarily see that happening legislatively anytime soon, but the net profits was part of it, and then the elimination of the municipal throwback rule is also currently in the budget. But like I said, this stuff could change the next couple weeks here.
Sure,
but,
sure.
That's where we're at.
The commercial activity tax, or the CAT tax, you sense any changes forthcoming in that area?
Not in this budget. The last two budgets there were proposed increases. It's currently at 0.26, and then there was a 0.32 and 0.30 were a couple proposals that had been out there in the past, but it was remaining at 0.26. And the society is actually part of a coalition of business groups that try to keep the credits and exemptions to the CAT limited in order to keep the rate low, and nor do we want to bifurcate the rate like some of the other states. Texas bifurcates the rate. Washington has like 35 to 40 different industry groups. So, with the one rate that applies to everybody in Ohio, that's, kind of how it's been since 2005 when it became enacted, and that's where we'd like to keep it. The credits and the exemptions, we just don't want it to become like the corporate franchise tax and the tangible personal property tax, because that's what it replaced. And those over the years became like Swiss cheese, and there was so many exemptions to them. And so where the CAT's currently at, we would like to keep the rate there and,
right,
and limit those exemptions and credits to it.
A lot of the feedback that we're receiving from our clients is, I think there's a general feeling that the their federal tax will go down, but the state tax all in will increase. Is that kind of a fair assessment, all in? When I say all in, the CAT tax, the deductions, the state tax, the sales tax.
Yeah, I mean, I think that, in the tax foundation comes out with these kind of studies where they look at, you can't just look at the state rate. I mean, even on the sales tax, the counties have a piggyback, the property tax and the income tax. I mean, the municipal income taxes, depending on where, if they have credit or not. I mean, there's examples out there where some people are paying 9 to 10% once the income tax is on top of that. So, I think the federal, what happens at that level, it'll impact each state differently, and so we'll have to kind of take a look at it depending on what they end up doing on that. But, the rates, the cutting the corporate rate, you see like 20% was in the House proposal, a better way that Congress came out with, and then 25% for pass-through entities. When Trump came out with his version, it was 15% for all of those. So, how that's going to get done, I think is, if they do it in the Senate without, it has to be revenue neutral. If, it's just a simple majority. If they want to get 60 votes, it doesn't have to be revenue neutral, but it's going to be harder. So I think, once the healthcare debate kind of maybe calms down a little bit, then I know the House has kind of picked it up, but the Senate hasn't been moving too quickly on the healthcare stuff. So I would like to see tax reform in 2017, but the farther we get into the year and closer to 2018 when it's election year, it's probably less likely. The big reform is less likely. They might get some, something with the rates, but it's not going to be kind of like what was kind of mentioned, even a couple months ago.
Is the business income deduction at the personal level safe for 2017? In your opinion?
Well, I think we'll
find out.
Yeah, we'll find out the next 2 to 3 weeks. I think there is discussions because they, especially since the income tax revenues are down so low, I think that's something that they're definitely taking a look at. Are they going to change the percentages back down to 75%? That could be something. Or the new 3% flat rate. Are they going to take that back? I don't necessarily see that maybe, but they might kind of define further the eligibility of who's eligible for it, and you maybe pare it down on that side. I think that there is a pretty strong chance that is not going to be status quo that was like impacted 2 years ago. I don't think it'll be anything too substantial. I do think that that's a policy that the state wants to keep, the legislature wants to keep. because they had just enacted it 2 years ago. I think it's a little too early to tell in that time frame whether it's working how they intended or not. So.
Right. I hear you speak at several of the events sponsored by the Ohio Society of CPAs, and you always kind of talk about the business climate in Ohio, and primarily from the tax side. Where do we, for our listeners, where in your opinion does Ohio stand or rank as far as a competitive feature with other states for doing business?
Yeah,
and are we getting better? Two-sided question.
Yeah, I mean, it depends on like I think the variables that go into these studies. I mean, you see site selectors, and they always have us in the top 5. Well, the Tax Foundation I just mentioned, I had seen their study. They have us ranked in the bottom 10 of states, and it's because they don't like gross receipts taxes, and we have a CAT tax, and we have 9 income tax brackets currently. I know this budget proposal pares it down to 7, so we're trying to get rid of. But they like the flatter taxes that in the states. So that's how they rank them, and so it depends on like where you look. I think Ohio's doing better. The governor, when he first came in, instituted Jobs Ohio. They are taking a more private sector approach to trying to get through incentives and economic development jobs into the state, but. I don't think any politician that you hear out there on the stump would say that you ever hit a satisfactory point unless unemployment hit 0%. And so I do think that they're trying to institute policies in Ohio that are beneficial. But like I said, we do kind of lag the nation in jobs added, and that might not necessarily just be because of the policies, but the warmer states, people like to go down to Florida and Texas and that kind of stuff too. So there's a lot of factors that go into where somebody wants to live.
We'll kind of recap our discussion today. Number one, as business owners, we need to pay attention to the state budget that's going to be upon us shortly. Look at the Ohio Society as a resource. A lot of committees, our clients have issues. They need to contact us. They need to contact you. The Ohio Society is a great resource and advocate for businesses within Ohio. Our guest today has been Greg Saul from the Ohio Society. He's the Director of Tax Policy. Thanks again for joining us on Unsuitable today. Sometimes it feels like our statewide issues are greatly overshadowed by what's going on at the federal level, and it's nice to drill into these issues we are facing in our home state, and Greg's done a nice job of that for us. Listeners, if you'd like to learn more about these issues, let us know. Email us at podcast@reacpa.com and tell us what legislative issues are most concerning to you and your business. You can also join the conversation on social media with the hashtag Rea Radio. And as always, don't forget to subscribe to Unsuitable on iTunes. Until next time, I'm Dave Kane, encouraging you to loosen up your tie and think outside the box. Wow, that went fast.
Yeah.
I didn't
So
Very
much
good.
information.
Oh, yeah.